Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenarios on the weekly time frame, where here we're looking for an impulse to the upside in 5 waves, and then inside the yellow wave 3 we're looking for the sub-degree green count 1, 2, 3, 4, 5. Common target area for your wave 4 is the 0.382 to the 0.5 Fibonacci, taken from the low to the high of wave 3, giving you a target area between 57.6 and 53.3k, with the invalidation being the 0.618 at 49.3k. An alternative and even more bullish scenario is a 1112, where after the blue wave 2 you expect a very big impulsive move towards the upside in a wave 3. Usually, wave 3 is the longest, strongest, most impulsive wave in an impulsive structure. And if we look at this scenario here, you can see that this wave 3 is relatively short, opening the door for this scenario here. Now, this wave 2 can retrace a lot deeper, that is no problem, but the invalidation is 38.5k. If we then zoom in and look at the most bullish scenario on the daily time frame, then we're looking for the low to be in this range and a continuation to the upside in an impulsive structure to new all-time highs, where here this is your wave 1, looking for 2 and then a wave 3 towards the upside. Alternatively, we do have this scenario to keep in mind, where we have a leading diagonal in a wave A, looking for a 3-wave structure to the upside in B, and then a 5-wave move down in a wave C. So locally, the price action is quite similar between the two, because in the most bullish scenario, you want to see a 1, 2, and then a wave 3, but in the bearish scenario, you have the same type of price action, but it's then labeled an A, B, C, and then you return. So in both cases, you would like to see price moving towards the upside first, and then depending on the price action and the impulsivity and the structures, we can get better probabilities for a continuation in a wave 3 or a 3-wave structure and a move towards the downside. Common target area for your wave B is the 382 to the 886 Fibonacci, taken from the high to the low of this wave A, giving you a target area between 63.1k and 71.9k. Preferably, this wave B also ends after the 0.382 Fib time, taken from the start to the end of wave A, which is the 19th of May. Invalidation for this scenario is price taking this high at 73.8k, but we want to see wave B finish and a wave C to the downside to take the lows at 56k. If we then zoom into the 4-hour time frame, the most bullish scenario here is that your wave 2 or B is finished, and we are currently working on a move towards the upside in either a wave 3 in the very bullish scenario or a wave C to finish that green B and then move towards the downside. The 0.5 Fibonacci has been hit, taken from the low to the high of wave 1 or A, which is a common target for 2 or B, and then we're looking for impulsive continuation to the upside. Do have some resistance to the upside here. First of all, this blue box 63.4k to 63.7k, and then this white box over here 64.4k to 64.6k. Inside wave 2 or B, we then have to count a 3-wave corrective structure, and in this scenario we then count it as an A, B, C, a 5-wave move to the downside in A, 3-wave B, and then a 5-wave C to the downside, where the common target area for your wave C is between 1 and 1.618, taken from the high to the low of A to the high of B, which, as you can see over here, has been respected. Now, what is not really ideal in this scenario is the 3-4 combination over here, because preferably I like to end wave 3 over here in this particular scenario, giving a flat in a wave 4, and the reason is that this move on the lower time frames here looks like a very nice contracting a diagonal, right, and not a corrective structure. So therefore it would be nice to actually move wave 3 over here, but then we have a bit of a problem, because this move to the upside here does not really relate to any potential wave 2 higher up, for this to be a wave 4 and then a 5 to the downside, and if this is your 2 and this is your 4, you have overlap, and that isn't allowed. So this isn't ideal in this particular scenario. The second option is that your wave 2 or B is not yet finished, and we're still looking for price to move towards the downside below this low here and also hit this target box, this area of support, the blue box here between 59.4k and 60k, and just above we have a little bit of support here as well, 61.1k to 61.5k. after wave 2 or B here, we are then looking for continuation to the upside. In that case, we are looking for a bigger ABC zigzag to the downside, where the common target area for your wave B is between the 05 and the 886, taken from the high to the low of A, giving you a target area between 63k and 64.9k. And after wave B, we want to see a wave C to the downside. Now, preferably this wave B is ending after the 0.382 fib time, taken from the high to the low of this wave A, sitting on Friday the 10th of May, which is today, at 5:30 p.m. Central European Time. Inside this wave A, we now count this structure here a little bit differently. We have in purple a wave 1, 2, 3, 4, and then a wave 5 to the downside in 5 waves. But then this wave 3 over here ends at this low with an ending diagonal in the white wave 5. And then in white, we have a 1, 2, 3, 4, 5-wave structure, which works very, very nicely indeed. Inside this wave B, we do have to look for a 3-wave structure to the upside, and either at the moment a zigzag or a double zigzag, with the zigzag being a wave 1, 2, 3, 4, 5 in an A, looking for a 3-wave corrective structure, and then continuation in a wave A, B, C, finish wave B, look for a move towards the downside. And the alternative is a double zigzag here, where you have over here an A, B, C to the upside, finished. This is then your wave X, so this is your W, this is your X, and you're looking for a wave Y, and then another A, B, C. And after wave Y, you want to see price move towards the downside. If we then talk about the bearish scenarios, then on the weekly time frame, we have a regular flat structure, 3-wave A, 3-wave B, and a 5-wave C to the downside. And a regular flat is an uncommon flat pattern. The most common flat pattern is an expanding flat in an A, B, C, where the common target area for your wave B is a little bit higher, between 98.2k and 122k. But by all means, hitting the target area for a regular flat wave B, looking for a 5-wave structure to the downside in your wave C, where then your target area is between 16.5k and 6.5k. The best area of support is the golden pocket taken from the low to the high at 69k, as well as the value area high of this multi-year volume profile at 9.7k. So the 10 to 9k area is very important in this particular scenario. If we then zoom into the daily time frame, then for this scenario, you need impulsive structures to the downside in wave C if this is the high of your wave B. So therefore, this scenario here being a wave 1, 2, 3 is one of the options. Wave 1 is that same leading diagonal, looking for a wave 2 to the upside here. Common target for your wave 2 is the yellow box taken from the high to the low of 1, which gives you a target between 65.1k and 70.1k. An uncommon target is the 382 at 63.1k. Very rare target is the 886 at 71.9k. Preferably, this wave 2 is ending after the same 382 as mentioned earlier for the ABC scenario, sitting on the 19th of May. And after this wave 2, we then want a very big move towards the downside in a wave 3. The most bearish scenario, but definitely not the highest probabilities, is that you have a double 1-2, 1-2, 1-2, and a move down. And the reason the probabilities are low is because of 3 reasons. First of all, wave 2 hit the 886 taken from the high to the low of this wave 1, and this is a rare target for a wave 2. Common for a wave B or a wave X, increasing the probabilities that any move to the downside here is corrective, increasing probabilities to sooner or later continue the trend. Secondly, this blue wave 1 is a lower degree wave 1, because in red we have a 1, 2, 3, 4, 5, and inside the red wave 3 we then have the blue count 1, 2, 3, 4, 5. However, this blue wave 1 is longer in price as well as in time compared to the red wave 1, which does lower the probabilities. And this wave 2 here has to be a running flat structure at the moment in a wave A, B, and then a wave C to the upside. Wave C not taking the high of wave A, and a running flat is the most rare flat structure, never preferred unless all of the other scenarios fail. When we look at the CVD divergences, we locally do have some bullish CVD divergences. First of all, on the 1 hour time frame, we have a higher low in price, lower low on the CVD, where the target is this high over here. The invalidation is price moving below the low. And then more locally, on the 15-minute time frame, we have a higher low in price, lower low on the CVD, which is a bullish CVD divergence. Target is this high, but as price moved towards the upside, we also created some bearish CVD divergence over here, lower high on price, higher high on the CVD. Now price did hit the 886 however, and therefore the probabilities are higher to still take these highs at a given moment, because the 886 once again is rare for a wave 2, common for a wave B or X, increasing the probabilities that any move towards the downside is a wave C or Y, which in turn increases probabilities to sooner or later move towards the upside and then hit that resistance that we have here as well, because we actually just missed out on hitting the resistance between 63.4k and 63.8k. Now we do have some news today, so pay attention. 4 p.m. Central European time over here. We have some high impact news, so make sure you trade safe around this hour. And if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario compared to the bearish scenario. On the 4-hour time frame, that's exactly the same, bullish above bearish. Bearish is only possible at the moment with a running flat. If we want to move down from here, and a running flat is very rare and never preferred. On the 1-hour time frame, the probabilities generally are higher to take 65k, as these scenarios have shown. Locally, price now starts to range a little bit longer, just below that resistance area, right? So a retracement soon would be quite interesting, and depending on the price section, we then look for a wave 2 to the downside and continuation to the upside without taking the low at 60.5k, or we look for a wave C to new local lows and hit the support just below. It has to be said that an impulse to the downside here in a wave A for an ABC does look better because of the 3-4 combination compared to a finished ABC and continuation to the upside. So that's at least something that I keep my eye on, but in general on the 1-hour time frame we are looking for 65k to be taken anyway, right? Now on the 15-minute time frame we are waiting for price to take the highs. That's the highest probability at the moment, because on the 15-minute the 886 has been touched. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.